Go in the trenches with gold and silver, our favorite topic here. Scott, I want to start with gold. Seems to be holding up.
Yes, right now gold didn't have as much fast money, I think, involved, and it wasn't as stretched and parabolic. So as of this point, it's come in, but it hasn't really been trounced like silver, because silver had that huge move.
Right.
So,
and also, as we saw, the first quarter, we saw major hedge funds dump gold, but that could have also happened in January when we had that big sell-off in the GLD as well. So it's hard to know when that happened. So we already might have seen some of that froth come out.
Yeah, so it's just a question of how much more. So
right.
What I want to do is I want to show you the chart here on GLD. We talked about how once we had that reversal or outside day, that was your point to sell it. Now the question is, can you buy this dip? So if you look here, this was, first of all, the descending channel that broke to the upside, which was your buy signal in the beginning of the year. This was your add when it broke above these highs. This was that move. Wasn't as crazy as silver, wasn't as parabolic, but then on this outside day, that's when most prudent traders got stopped out. So this is a pretty decent sized move right back to support. You had your little feeble bounce, and now what you have here is a wedge type pattern, a pattern of indecision, which is what we've been talking about,
right.
A pattern where we're like, okay, was that enough? We just came off the highs, we just had to pull off lower. Does it continue? So now I'm going to wait to see which direction this wedge resolves.
It also doesn't help that the currencies are so wishy-washy too, and it seems like the gold and silver are really related to the dollar and euro right now. So they're wishy-washy, the metals will be wishy-washy. That's how I'm looking at it.
Yeah, and sometimes they've been following the currencies, and sometimes they just
don't.
diverge from them. So this is what I'm going to look at for the GLDs. You look right here. If the GLDs start breaking below 145 to 144.5, we're probably going to see some continuation. So if you're trying to play this bounce here, I would get out, because then we're going to at least test this lower level of 142.55, and if that doesn't hold, you could see a move back down to this 138.50. But on the other hand, if all of a sudden it starts taking out this 146.50, 147, you'll know that was your correction, and you could add some here if you sold the strength, and we could see how we then take, move back higher, back to those highs. So right now, let's see which way the wedge resolves. Watch the action versus everyone else's talking points.
And before we get to silver, I want to just, point something out to the long-term guys, is that one of the fears that I've been hearing about for a long time is ever since the advent of the physically backed ETFs, once the hot money, the hedge funds, the big guys run out of it, gold is going to plummet. We saw that happen. I mean, we saw Soros run, we saw Eaton Park Management run. I mean, they all fled over the first quarter, and gold held up. I mean, it held up pretty well. And I wonder if that's a long-term supportive sign. I mean, some people were saying it was going to go to $800 once the fear premium came out. All right, so let's move to silver. Now, around 34, what do you think? Is it holding up as well?
It's trying to hold lower support. Just as quickly as it went up in that parabolic move, it's come right back down. The question is, do they want to really test all the long's patience and push it below? Right now it's holding. If you take a quick look here on SLV, just to give you a quick and dirty on the chart, here was that long-standing uptrend that was broken. Here was your accelerated uptrend that was broken. We now came back into support. It's trying to find a bottom here. So right now, if you sold into the excitement here, you have the luxury of trying to buy it back, but if it starts to break the SLVs below 32.76 down to 32, you could see a move down to the 200-day of 30. If that lower support holds and it starts to get back above this 34 area, you could see a bounce back to 37.38, which is resistance 1, and then maybe higher. So right now, you really have to have like a tight leash.
Yeah.
Either like a really loose leash, like saying, okay, I don't care, I'll buy silver at 34, then again at 28. But if you're trying to be exact, you need to have these levels in your head so you know how to act quickly when they do come into fruition.
And talking about hot money for silver, we saw JP Morgan and Bank of America bet heavily on the SLV in the first quarter. You have to wonder what they did in April. That's all I got to say. Okay, real quick, I want to wrap up with mining stocks because they provide some kind of direction. We saw when gold rallied 3 days last week that the gold mining stocks did pretty much nothing, which pointed to me possibly another leg lower for gold. If we go to like the GDX and the SIL, a lot of people have been saying that they're going to rally, but I'm not seeing it, and I wanted to see if you saw anything in the charts.
Just to go over this real quick, the miners have been horrible. They've been disappointing. No one's making any money unless you've been short there. I just looked at GDX. They have a little room to bounce, but I wouldn't be investing in this group. I'm going to show you quickly. We're not even going to go over the silver. It's below all the moving averages here. But look, small little pivot versus support. If it starts breaking above this 55.50, you could see a move back to 57, but that's just going to be quick. That's just going to be a bounce. And then, at that point, we'll see how it holds up and see if investors can get involved in there. If you're quick and nimble, tier 1 at best, and that's all we're going to talk about with the miners.
All right, let's go.